All right. What's up, everyone? Hope you're all having a great Tuesday. It's been a long time since I recorded and uploaded a video here on the channel. Been very busy working on a few projects of mine, as you might be aware of if you follow me on the different social media channels. But there's a lot of things happening in the markets right now, and as I'm going through the markets and doing a market scan, I figured, you know what? Well, let's get a video up. Just a pure technical analysis video breaking down some of the markets I'm watching right now and some of the opportunities that I'm watching in the market. So first of all, my portfolio that I have right now is in the S&P 500. So we're talking about the long-term portfolio here, right? So I want to give you some updates on that. That's about 60% in the S&P 500, and then we have about 30% in gold, and then I got 10% left for 10% left for Bitcoin. Now the allocation is 100% invested in the S&P 500, so the allocation of 60% of the S&P 500 is at full 60%. Same with gold, but for Bitcoin it is 0. But I wanted to talk a little bit about that, and also I've been thinking about moving my pure S&P 500 holdings into a global equities index to diversify that part of the portfolio. And then also with the lower Bitcoin goes, the more interested I'm getting in adding to the Bitcoin position, basically. But I wanted to show you something. This is also something that is in the Discord, right? Where every day I'm using a regime filter monitoring system. I can show you what that looks like. So for Bitcoin, for example, we have this chart. Give me a second. I'll have to actually copy paste that into TradingView here. So this is the chart that gets posted every morning. Actually gets posted every Monday. I have a list of this is for the Clarity Edge analysis, the regime index score. And as you can see right here, we did in the beginning of January, around the beginning of January, or was it November? I believe it's October, November. We entered a declining market regime, basically bearish market regime. And the first sign for me to see a bottom here would be, first of all, for this to flip yellow, and then of course flip green. And we're not really there yet at all. Now we can look at the other regime charts. Look at the S&P 500, for example. See if I can find that one. Yeah, that's going to be this one right here. Just give me a second. I'm going to copy paste that into TradingView. You can see what I'm talking about. So as you can see, it's going to be this one right here. And currently it is in a bullish market regime. And S&P 500 is mostly in a bullish market regime. But the idea here would be to look at exiting the market or reducing position size when this market regime flips, which haven't happened yet. But you can see, even on this chart right here, you can see that what a top usually looks like. And what a top usually looks like is, you know, you have strong momentum, weakening momentum, flat down, right? Strong momentum, weakening momentum, flat price action, or double top or equal tops, and then a move lower. And this was the bear market in 2022. And here we've seen the same thing, strong momentum to the upside. Here we have a double top. I believe this is on the weekly time frame, and then a drop down into a bearish market regime. I did exit the market here, but I did then enter the market once again. Yes, I did lose on some profits here, but this is a type 1 error, and I would much rather take a make a type 1 error mistake, then a type 2 error mistake. If you don't know what I'm talking about, let me know in the comments and I'll happy to break that down. But basically, a type 1 error is a what is it? That's embarrassing. A type 2 error is a so type 1 error is basically a false positive, and a type 2 error is a false negative. And basically what this means is, in a false positive type 1 error, you take a trade and it looks like a valid setup, but it's not a valid setup. And so the signal fired, you entered, and then it failed. So basically, you exit the market and it's a false signal, so you enter the market once again. You miss out on some profits, right? But there's no catastrophic loss. Now, a type 2 error, that's a false negative. That's when you skip a signal, but it's actually a real signal. So the signal is real. We are entering a bear market. We are going down, but you don't exit the market because you think that's just not the case. That's a type 2 error. Now, type 1 error is going to save you from catastrophic losses, and a type 2 error was simply that's just a bad trade, bad mistake. So looking at these regime filter charts here, that's how I'm positioning myself for the future in the markets, right? And it works well for the Forex market as well. And speaking of the Forex market, we do have a lot of interesting opportunities that I want to go through and show you here in this video today. But let's begin with Bitcoin, and I'll show you what I'm watching here. A few things to note. We got the weekly RSI at record lows, right? And I know a lot of people have been talking about the weekly RSI being oversold for Bitcoin to be, it's going to be a potential buying opportunity, which is, from a historical point of view, that's just not the case. Once the weekly RSI entered the oversold territory, which is below 30, back in 2022, we went down 30% extra, right? Now, a 30% move to the downside from where this happened now in January would be down to 40K. So then we're talking about that 40K support level, right? Something to note is we have the weekly 200 simple moving average. Yes, the 200 simple moving average is a very good level where Bitcoin has found support in the past, but it has found support around this area. You can still see in the last bottom formation in 2022, we had a 30% move to the downside after losing the 200 simple moving average. So it's around the same area, but there's still a very big room for error. And as you can see back in here, we also had a bullish divergence between price and RSI before that long-term bottom was created back in 2022. So that's definitely something worth checking. We can also see up here, we also had a 20 EMA crossing below the 50 EMA on the weekly. And once that happens, it's usually a good sign of a bigger reversal happening. So there's, in my mind, there's no question about it. We are in a bear market, as I'm sure most of you would agree with in at this stage. So what am I thinking in terms of market structure for the next few months for Bitcoin, or I guess for the rest of this year? Well, what I'm looking at is simply applying the theory of Dow theory from Charles Dow, the idea that markets move between accumulation and distribution. You can clearly see here that we are right now in a markdown phase or downtrend or bear market, call it whatever you want. It's higher highs, lower highs and lower lows, right? And what I'm seeing here is, even if we do come up and test that 80 to 85K region for Bitcoin, we're still in downtrend. And for me, if I'm going to be following the trend, which I am, that's the only thing I'm interested in as a trend trader, I would obviously be looking at selling Bitcoin around 80 to between 80 and 85K. And the reason for that is simple. We are in a downtrend, and I am not going to go long in a downtrend. I'm going to go short in a downtrend, but I'm not shorting a downtrend at support. And that's right where we are right now. I'm shorting a downtrend at resistance. We are not there yet. So for Bitcoin, for me, not very interested in terms of trading this from a swing trader's perspective. Now, if we add some levels here, you can see here we have 30K support. That's the lowest level where I believe Bitcoin might wick down to this area once we enter that accumulation zone. I think 40K, around 40K, I think is a good average price for a future accumulation range, but I would not be surprised to see a wick down to 30 or even lower during the accumulation phase. Then we have two of the most important levels right now is the 70K support and the 85K resistance. When you see 85K resistance, think 80 to 85K. Going into the daily here, we see some interesting price action. As you can see here, we had the attack on Iran on 28th of February, which interestingly enough, Bitcoin dumped initially and then actually rallied to the upside of the news that their supreme leader had been killed. But then we dumped down again. We had a nice, break above 70K recently. We had that, I believe that was 4 or 5 days ago. We had a break above 70K, and we have since then retraced below that level over the weekend. And that was a really nice looking breakout right here, and it does look like the market is waiting to kind of turn here and have that breakout perhaps up to the 80 to 85K resistance area. And if you notice, I also added the OBV here on the daily, and you can see that the OBV is strictly, well, not strictly, but it's in a downtrend. You see overall downwards trending price action here with higher highs and higher lows. This is not really a bearish structure on the daily OBV. So what I would like to see here is a break of structure on the OBV and kind of print a higher low. We can see here we have a small section of higher highs and higher lows, but the overall structure is still to the downside. So I would like to see that flip to really show that buyers are stepping in and defending this move to the upside. There was no real buying pressure on that breakout, which I believe caused it to fail. But even if we do get that breakout, and if we add the local levels right here, we'll see that we are right now between two important levels, the 70K and the 74K local resistance. They break above that 74K local resistance, and we are most likely going to move up into that 80 to 85K level. We also have the weekly 20 EMA somewhere around this area, and we also got the local short reload zone. There's just a lot of confidence here for Bitcoin as resistance. All right, so that's Bitcoin. Let's move on to the S&P 500. Right, and by the way, if you like these simple analytical videos where I just break down the charts as I do my own market scanning. So basically this is just me going through the markets and planning my own trading, and then just sharing my thoughts with you guys as I do so. So first of all, the first thing that I'm thinking about here with the US 500, the S&P 500, is a strong move to the upside. Momentum, strong momentum to the upside. Momentum starts picking up here, slowing down here, equal lows, equal highs, breaking to new all-time highs, no follow through whatsoever. OBV starts falling to the downside. We see on what am I doing? We see also RSI here in the daily, clearly bearish divergence through this whole range on the daily RSI. Same thing on the weekly. The OBV started printing lower highs on the weekly RSI, clear bearish divergence here. So there's some serious weakness in terms of momentum on the S&P 500, which is very obvious at this point. We're in a high time frame range. We got the high time frame. Well, look at that. I can't spell. We get that high time frame support sitting at 6,500. We got that range EQ support 6,750, and then all-time highs resistance at around 7,000. And right now we're trading within this range, and I I'm most likely going to be holding the S&P 500 in my portfolio as long as we're trading within this range. But as soon as we break down in the range, we're probably going to flip into a bearish market regime, and that's when I will most likely exit the market, or at least reduce the position size of the S&P 500 holdings to 50% of the desired position size. And then when it's time to enter again, I'm going to do so through the lens of the global equity indices or ETFs. Okay, so that's Bitcoin and the S&P 500. So what I'm seeing here is a weakening overall market. Bitcoin is at a support level, and I wouldn't be surprised to see it trading around 80 to 85k in the next few weeks. But I do believe that's going to be a relief rally right into a resistance within a overall downtrend. The fact that S&P 500 as a risk asset is also showing weakness here, we can also, if we go into the 4-hour, we do see that we do have a structure here that is not really bullish, right? We got that overall downtrend hitting that descending trend line, confluent with that 6,825 resistance zone, confluent with the local reload zone. This to me doesn't scream strength, and even though we're trading slightly above that range key area, I do view this whole area as resistance. So there's definitely weakness in the S&P 500, and that's not going to help Bitcoin. These are both risk assets. They are moving according to the same type of risk and retail sentiment, right? So this will not be helpful for Bitcoin. So the S&P 500, I'm looking for a reclaim of 6,825 to be back in a bullish market structure for that. Let's head over to gold as well. Now, gold should be higher, and I think we're seeing the we're seeing that playing out right now. I think the reason why gold didn't explode to the upside on the Iran situation, obviously I'm only speculating and I'm not a macro expert, but I do feel like gold was very much overbought already. Maybe not overbought, but it was very much bought up. And if everyone has already bought, then there's not going to be a lot of buyers left when something's happening, right? So, and I'm not saying that exactly how it works here, but that's just something that you can keep in mind when you're looking at gold. We had the situation with Iran, but gold, in my views, should be trading higher, and it doesn't really matter what I think, but looking at price, I think it's very, very clear that we are seeing this type of structure, and that is a bounce on that support. This is a break and retest, right? So it looks like the trend is very much alive for gold, and it's even if you view this as some type of range, it's still a very, very healthy range and a bullish range with an overall broader uptrend. So gold, I'm bullish on. I have no plans on reducing my positions in gold whatsoever. A few markets, actually I'm just gonna show you two Forex pairs here because the video is already way longer than what I wanted. But if you like these videos and you want me to have more updates like this one for you guys, I'll try to I'm gonna try to upload them on a more regular basis to kind of give you my thoughts on what I'm doing and what I'm watching. A lot of you probably thinking what's up with oil. Yeah, it's I'm not touching oil. There's just too much volatility, too much uncertainty. I don't really understand how to trade this. But the local highs at 92 and the local lows at 86. This is Brent crude oil, UK oil, I believe, in some places it's called. A break above 92, 93, maybe 94 should probably take us up to the 102 to 105 region, and then a break below the range lows. You got that 78, but it's all about what happens in the Strait of Hormuz, what happens with Iran, and all the comments from Trump. As you can see on the daily here, Trump has the ability to really move the markets here, as you can see from this candle right here. It's crazy and it's very volatile. And you get caught on the wrong side of this market, you're going to be in pain. So I would rather look for moves that make sense. All right, so two interesting pairs I'm watching is Euro NCD and Euro AUD. Let's begin with Euro NCD. So here on Euro NCD, I must admit that I missed a fantastic trading opportunity with this type of head and shoulders pattern right here. And then it broke down and it hit that measured move of that head and shoulders almost perfectly, right? So yeah, missed out on that one, no problem. What I'm watching now is a break below the area around 1.94. I'm gonna add an alert here. So around that level. And I'll add an alert up here as well. Let me just go in and double check. So that's a once only open-ended, yeah. So I'm looking to short Euro NCD from this level up here. If we break down something like this down here, I'm thinking this is a pretty good risk to reward trade. Probably looking at 3 to 4, maybe 5, depending on where the invalidation would be for that trade. But somewhere around 3 to 4 are thinking for this one. And then we have Euro AD. Okay, Euro AD not interesting here at this point because this is not confirming. But we're broken down here. Euro AD is very much oversold. Very, very much oversold here. And I'm thinking we're getting into an area. Look here on the weekly. Like this whole zone is just interesting to me, right? This whole area right here is interesting to me from a buyer's perspective because we had a strong multi-year rectangle pattern, multi-year range. We broke out, very strong move to the upside. We started trading in an area where historically Euro AD, hasn't been trading in since the financial crisis, and we're not getting into this level right here. Now, if we start forming a base here, I think that would be a great time to accumulate Euro AD for that next leg higher. And it might just be something simple like this. You're just coming in to this low area right here. So on the daily, that might look something like this, where you start trading like this. And then, a breakout here on a potential accumulation range might be a very, very good risk to reward opportunity where you might enter on that breakout, stops even below here or somewhere wherever that invalidation is, and then you trade it up to the range highs again, right? So you're basically buying a very much oversold market on confirmation and then just letting it run all the way up to range high while you're moving that stuff up to the upside. There was another market I was looking at, I'm sure. So I'm just going to see if I can find that one. This is the one. This is Euro CAD. Now, again, I must admit that I'm not sure if I missed it or if it didn't really give me an entry. So Euro CAD here. Again, this is a pair that have been trading above this level in an area where it historically is not trading at very much, right? And whenever it goes up into this area, it starts trading for a few months, but then it breaks down. It usually has violent breakdowns when that happens, right? You can see all these tests of this upper area. It causes violent moves to the downside. And that's exactly what happened right here. And I tried to predict when will the breakdown happen and how long will it take. And if we move this forward, I'm thinking a move like this might take something like 200 days, right? So the way I view it is I have 200 days to ride this trend, okay? But I might only have, maybe 30 to 40 days to find a good entry and still have a good risk to reward before the new trend being trading too close to that profit target. So the idea here on EuroCAD is very simple. You can see I have alerts up in this region, and the idea is very simple. Now let's just assume that this is the low, right? So we put a fib on this move to the downside, and we see that that's just a beautiful area for potential entry. Let's add the daily 20 and 50 as well. You can see that the market is very much oversold here. Let's look at the RSI here on the daily. I mean, I don't think I've ever seen in the history of EuroCAD the market being this oversold. So what I would love to see is for some type of accumulation here in the next few days, maybe a bullish divergence on the RSI to come in, and we can look at the OBV, maybe see a break of structure on the OBV. You can go into the lower time frames here as well, and yeah, we do see that we are potentially creating a bullish divergence soon on that RSI here on the 4-hour, and I'm thinking we might get something like this and then move up. And if that happens, I'm looking to get confirmation of a short up here. But we can also see on the daily with the moving averages, they're trading way away from the moving averages, showing that it's overextended. And I'm looking for a mean reverting move back up into the bands and into this horizontal level. And if that happens, I'm looking to take a trade here. And if you look at let's say we have an entry here and potentially have a stop loss above this region, right? Because you can see here, obviously, very tight price action right here. Good level, good level. Putting the stop loss up here, if there's confirmation, so maybe price moves up here and then forms something like this. Perfect, right? Perfect. M structure with the right top of the M maybe being slightly lower than the left one. So what's the risk to reward here? Well, I'm looking to take this down to this region here, right? So probably around here. So that's going to be about 4R or so. All right, that's the trades that I'm looking at right now. And as you can see, I'm a swing trader, right? I don't really care about what happens during the day or what happens tomorrow. I care about what have happened during the course of a week, right? And what do I think is going to happen in the next few weeks or months in the markets. All right, so that's what I'm watching. If I do find anything else, or if there's anything I want to update you guys on, I will make sure to record a new video and get that up. But if you like these videos, make sure to hit that like and subscribe and leave a comment if there's anything specific you want me to watch.